You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that funky tune, some may say the funkiest of our tunes here on the old network, means it's time for TWIFO, This Week in Futures Options, a program where, as the name implies, we break down the hot activity over there on the other side of the fence, the futures options side of the fence. So all the cool stuff going on in your crude, your gold, your corn, your lean hogs, your fluid milks, whatever is catching your eye, whatever is lighting it up that week, we're going to break it down. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to digest on your own, including over 50 now archive episodes of this fine program, TWIFO. So you want to go back and see what was going on maybe during Brexit or even just recently in the French election, if you missed that one, or back in the election time frame. We got a lot of good stuff for you. Go check it out. The easiest place to find all that, of course, the mothership, the flagship, theoptionsinsider.com. And of course, you can always join us live every Friday, 1:30 p.m. Central via Mixlr, M-I-X-L-R. I know a bunch of you in there right now. Hope you like that little interlude we had for you there, playing a little bit of options news rundown in between vol views, the end of vol views, and the beginning of TWIFO. So keep your juices flowing as we get. And also give you a little bit of a taste of our guest who's going to join us on the program in a little bit. But first, let me introduce my cohort, my partner in crime, my futures options yin to my yang, Mr. Nick Howard, the founder of a little platform we like to use around here quite a bit called Quick Strike. Mr. Nick, welcome back to the TWIFO program, sir.
Hey, good to be back. Happy Friday. I'm glad we're at the end of the week here, so let's get the ball rolling.
You sound super excited. Nick joining me, as you can tell, listeners, here in the old studio and beaming in from parts unknown, although a little birdie told me he may be coming in from far, far south of Chicago. We are joined by my other nemesis on the old network, Mr. Dan Passarelli, the founder of Market Taker Mentoring, making an unprecedented return trip to the CME hot seat. I don't know, Mr. P. I don't know if you know. This is a very coveted seat you are sitting in now for the second time, Mr. P. So clearly maybe you did something right the first time. Welcome back to the TWIFO program, sir.
Oh, I'm glad to be back. Saying I'm so far south from Chicago, I feel like I ought to have a southern drawl or something.
Yeah, you're actually in Kentucky, aren't you?
Right, you would think.
All right. Well, with the band assembled, let's dive right into it. I think you listeners can probably guess what the heck we're going to talk about. If you want to follow along live, listeners, you can, of course, do it live in the chat via Mixler. But also, if you want to generate your own reports, you can see exactly what Nick and I and Dan are going to be talking about here for the next hour or so. Head on over, cmegroup.com/TWIFO, TWIFO. Of course, this week in futures options. What will that do for you? That will get you to a cool page where you get access to all these great quick strike tools that we use throughout the show. And Nick and his team have done something pretty cool for you guys who join us live. A little bit of a present for the live folks. Unfortunately, you guys listening on the podcast, you can't get access to it. It's a little bit of a cherry to join us in the chat there, but it means he's activated all of the links in Quick Strike while the show is live. So every Friday between 1:30 p.m. and 2:30 p.m. Central, 2:30 to 3:30 Eastern, those links that you can click on to get more information. Like, for example, listeners, we're going to start talking about WTI in a minute or so. And if you click on that most active there in the front month, you hit those 50s. You click on that, you'll see the entirety of what was lighting it up in that month, the entire strike chain. So all the puts, all the calls that were lighting it up, just like I'm doing right now. So you too can do that live if you join us live in the chat every week. So check it out. It's a pretty cool thing, and it helps you, it gives you a little bit more information exactly what we're seeing. You're seeing what we're seeing here as we're doing the show here live. And let's kick things off. It was an interesting week, Nick and Dan, here in Crude. People, I forgot how long now, Nick, people have been, probably since November, people have been asking us, where the heck did the crude vol go? What's going on with crude vol? Where can I get some crude vol? So, or some variation therein on that theme. And it seems like maybe we're finally delivering that. You know, we had a few sparks of life of crude vol about a month or so ago, but it seems like ever since that November OPEC day, that was really the inflection point. And now we're starting to see that come back again. Surprise, surprise, Nick, because the futures actually flirted with, we're actually back around those levels again. So back around those November levels, they actually got it pretty low overnight. What was it? So 43 got down as through? 43.75, yes. So pretty low intraday, ending the week here now off about 3.5 handles in the front month, so right around 46. And as you get down, the term structure gets a little bit higher, obviously, so up to 47, 48. But in general, mid to high 40s, which is the levels, again, we haven't seen again sustained in quite some time. And surprise, surprise, all this downside means there's some green on the screen when it comes to the volatility, with vol up about 5 points starting off near the front month, or in 6.5 actually, for what you can call vol in the front month. And then it kind of trickles down a little bit from there, but vol up aggressively pretty much across the board. So for all of you out there who are saying, hey, you know, when am I going to get some vol, when am I going to get some juice? Maybe you've been buying premium out there in WTI hoping for just this kind of move. Well, it looks like you got your move finally. You're a happy camper. You know, and let's actually maybe before we start breaking down the activity, Dan, you're out there on the front lines chatting with the folks, doing the mentoring, the options education. I know you've added a lot more futures and futures options education to your options mentoring arsenal these days. So you're engaging with a lot more people out there on these products. What are you hearing from them? Are they coming to you first and foremost for crude these days, or is it something else? What are you hearing from the folks out there?
Yeah, we're hearing, I guess, kind of all the things that you would expect to be hearing. You know, definitely people are talking about the energy sector because it's been moving, you know, and then I mean, obviously people are always looking at the Fed funds, that and interest rates and currencies, I mean, there's, futures are real popular these days because that's kind of the stuff that's in the news, all these macroeconomic things. So yeah, we've got a lot of people watching the crude for sure.
You're gonna start launching some crude courses, maybe some crude volatility courses or some crude action courses over there.
Not a bad idea, Mark. You just got promoted to chief course op officer.
There you go. I can add another hat. I can add a hat to my legion of hats that I already wear over here. Thank you, Sean. My shoulders are already dipped down enough with the legion of hats that I wear over here. Well, speaking of dipping into things, let's dip into the action out here in WTI this week. Again, if you're listening live, you can click on those links. Just go into energy, click WTI American there, and then you'll see right there that top link for what we're going to talk about, which are June is front month. June getting the lion's share of the love again this week. 53% of the action going up out there, including number one with the bullet. Just size action going up here, Mr. Nick. It was the 50 calls. Yes, the June 50 calls, lighting it up, taking our number one spot here. 71,000 contracts going up this week. I think that's almost all of copper combined, Nick, if not more in that one strike. A lot of action out here, including 20,000 on Wednesday, another 18, almost 19,000 on Thursday, nearly 15,000 going up today. So big action late in the week here in the good old 50 calls. And that's not really surprising, Nick. We've been seeing a lot of action in the doubles of late, but seeing the 50s lighting it up this week, because that's the strike that, that captures the imagination, that people are, will it break the strike? Won't it break the strike? Oh no, it broke the strike. It won't get there. You see a lot of action around that strike as a result. So the 50s delivering pretty hard, and right behind it, hot on its heels, Nick, number two with a slightly smaller bullet, maybe a 44 to a 22, is the 45 puts out here in June, with about 63,000 of those, including just about half of those, a little more actually, coming on Thursday. 34,000 of those going up on Thursday. There was a good chunk of closing of those going up this week as well, but still overall a lot of paper out there, about 63,000 contracts lighting it up. Then we get to the aforementioned doubles, Nick, the 55 calls, doing about 40,000 contracts and change, including the big day Wednesday, 15,000, actually 16 almost, about 5,000 of those actually closing on Wednesday. So we saw big prints going up early in the week too, maybe people deciding discretion, the better part of valor there on Wednesday and taking some off the table, and about 7,500 going up again today. So pretty active. The double calls weren't just in the front month though. You can go out a bit to July. The double calls are also printing out there as well, doing about 40,000 of the July doubles, easy for me to say. The July doubles, about 13,000 contracts on Wednesday, total of about 40, almost 41,000. So double strike, Mr. Nick, again this week. That's where, maybe that's the new 50. I don't know. This week, obviously, 50 did number one, but if you add up all the action on the double strikes across the board, I'm guessing that's going to be actually the volume leader. And it's not to say it was all front month all the time either. We saw Dees having some action, including the 40 puts, about 7,000 of those, Dees of 2017, obviously lighting it up, and a little bit longer term out there getting into June of next year. We saw about 5,500 of the June 60 calls going up. So we talked a little bit last week, Nick, about longer term bulls emerging out here, and we saw that again this week with also the Dees of 2018, about 3,000 again of the 60 strike. So the 60 strike a little bit active longer term, a good chunk of that opening. So opening paper on the upside, longer term, nearer term, we got the 50s and some downside puts. Mr. Nick, I know you were watching the quick skew pretty actively this week. Walk us through what caught your eye out here in WTI and what was lighting it up over there in the skew this week.
Yeah, well, we'll get to the skew. One thing you notice, Mark, when you open up the volume detail pop up, so you go over to the most active column and click on that 50 call, you'll see that the open interest in that 50 call is only around 38 or 39,000, but the volume was 72,000. So there's a lot of trade going on there, right?
A lot of churn, a lot of churn and burn.
A lot of churn, and then you're seeing the same thing over there in the 45 put. So you see there's back and forth, right? So there's people thinking both directions, or people taking profits, or whatever the case may be. So I just wanted to point that out. You got openings and you got churn. So new people in the market, and you also got people trading, and so that makes for good stuff. The other thing I wanted to mention in the WTI before I forget, we've been talking we've been talking about the OPEC meeting that's coming in May, right? So, and we mentioned early on about July being the contract of choice because the June contract didn't encompass the OPEC meeting, but a new contract just came on CME this week. It's the week 4 contract, and it expires the day after the OPEC meeting. So if people are out there looking to try to take advantage of the event itself, probably the best bang for their buck is the LO4K7 contract. So that's the week 4 crude contract. So that will get you everything leading up to, including, and the day after the OPEC meeting. So if you want to maximize your event vol exposure, that's probably a good idea. And if you go look at the term structure, which you can also see for free out at cmegroup.com/quickstrike, you'll notice that those two volatilities are trading very near each other, the LO4 and the LN, or LON. So that's just something I wanted to mention so people out there could take a look and see what they thought. As far as the quick skew goes, we had a great range this week, and we had a great range even today and overnight, like you mentioned. So there's a lot of movement, a lot of trade, and still, if we take a look and see what's happening. And if you go out into the 25 delta quick skew column, you're going to notice a couple things. Let's ignore the June, which has got 12 days expiration, because as we talked about before, the skew everything tends to smile up as you get closer to expiration. But if we look at the July contract, you're going to see that from last week, the puts are less expensive and the calls are less cheap, right? So that's actually fairly surprising in a way, given the break that we had, So that's something to watch, and I think you're seeing that across the board. If you fan your way down, you're going to see the puts got less expensive and the calls got less cheap. So that means that we might have found some sort of, maybe this is our stable point, right? Maybe this is where things start to balance out, and we say, okay. And that was the sense. And again, not being a crude guy, but just kind of listening to the news and watching and all that kind of thing. You started to hear people talking about the fact that we could go lower with the shale production and just the general, I don't know if disregard's the right word, but still just the increased production in the U.S., right? So, as these numbers, as the inventory numbers and the production numbers increase, I think there's some sense that this might be a new level, meaning that it's not going to go down, even though OPEC has the cuts in place and has had the cuts in place, and probably will continue those cuts in the next meeting. But maybe there is a real fear that we can go get back below 40 again. So that'll be interesting to watch. But it looks like the vol curve is settling up a little bit. It's still, puts are still rich to the at-the-money, calls are still cheap to the at-the-money. But we did balance out this week a little bit. So as far as that goes, that's kind of the one thing I'm noticing quite well. And again, remember, if you're listening and watching, you can go out there and click on any one of those quick skew dark blue links, and that'll bring up the quick skew curve, so you could take a look and see what that has done over a period of time. And you'll notice that if you have it open, you'll notice that it's kind of moved towards it, that alley has tightened a little bit. It was pretty wide for the last few months.
Well, there's a lot we can talk about, I think, on crude, and you're right. It is kind of surprising that we're not seeing, maybe some of the developments that we thought we would. I think a lot of people thought once we broke aggressively south of 50 and we kind of continued that way, that we would see probably an aggressive return to the old skew that we would see around pre-November, pre-OPEC meeting, which was, of course, super sharply bid to the puts, and the calls had no love whatsoever. So it was a great setup for bullish risk reversals and things like that. Of course, post that, we saw the calls get a little bit more life, the puts not as juicy. We thought maybe we would revert to that, but so far, vol's coming back. The skew maybe not quite as aggressive as some people would have hoped or perhaps thought, given all this. Again, all this is going to depend on, because we have flirted, not quite with these levels, but we have flirted with south of 50 before in WTI, and we saw it bounce right back, and the vol came crushing back in. So the question, now, of course, is this sustained? I agree with you there, Nick. It does seem like we're seeing a little bit more sustained momentum. Obviously, the overnight was, and with the lows there, was perhaps eye-opening to a lot of people that we didn't just immediately rally back. So perhaps that is an indicator that we are perhaps heading for new levels, which would bring back perhaps some of the old volatility regimes, the higher levels, the higher implied, the OIV north of 30 or 35 again, which, as we're thinking, is somewhere in that level again right now, I believe. So it is interesting to see. I know you were talking a lot in a lot of the media this week, Nick, about crude production and everything else like there. So it's good to see that the that the TWIFO reach is extending out to a lot of different outlets. But before we move on, do you guys have a preference? I don't know, Dan, or maybe you, Nick, for what else? I was asking our listeners, but we just put it out, so we don't have numbers yet on that. So what are you guys feeling next in terms of what you'd like to handle? I don't know, Dan, you said people are talking, the Fed a lot. That's one of the things kind of nice, actually. It was a Fed week, and it kind of came and went because everyone else was watching just about everything else out there. So it wasn't that big of a driver for us. But that said, are you seeing a lot of interest over there in the Fed stuff, Dan? In which case, think we should hit that one next? What are you feeling, sir?
Yeah, I mean, what a lot of people do, just simply, even people who don't trade futures, some of my equity options people, they're very, very interested in just observing where the futures are trading, of course, to get a sense of what the market thinks the Fed might do next. But it's worth a look from a trading standpoint too. Why not? Let's check it out.
All right, Mr. Nick, you're my go-to Treasuries guy. You actually spend some time, not in the Treasuries so much, but in the Eurodollar. They're kind of the other side of that coin. So I know you're watching. I know you've also been cranking out some cool revisions to that tool over there that the CME likes to talk about quite a bit. We haven't talked about it in a little while because there hasn't been a lot of Fed to watch. Which is not a bad thing at the end of the day, but they do have that cool Fed Watch tool. So why don't you walk us through that really quickly too, kind of what they're tweaking on there, what they're changing, and what people who are listening who want to keep an eye on what the market is pricing and what they can do.
Yeah, so thanks, Mark. So this last weekend, I believe, the CME released a new Fed Watch tool, and that's one that we were able to be fortunate enough to write for them. And the reason I wanted you to mention is, first of all, it's out there, cmegroup.com/FedWatch, and it's a really popular tool throughout this whole. Anytime there's the Fed is active in the market, right? So you're seeing a lot of activity on that tool, and really what it allows you to do is you can get an idea of what the Fed's going to do in the next meeting. So the interesting thing I'll point out, and what I'll do is I'll tweet it out during the show, is just from the fact that everybody was pretty set that nothing was going to happen in March, right? And the probability that something was going to happen in June, especially since the Fed's been talking about 2 more for 2017, it was pretty high. But then we have our strong non-farm payroll and our revision that's not too much lower from the previous month. And that really sort of set in stone the fact that it looks like there's going to be a tightening or a higher probability of the tightening in the June contract. So I'll push this one out. And just looking at it, it started out the day, we jumped probably 7% in the probability just overnight. Just the fact that, yes, March, nobody expected anything, and then really strong non-farm. So now there'll be even more eyes on that for next month. So that's really the big thing to notice here. And I'm going to push this out, and you guys will be able to take a look at this right now. And you could also go out to the CME site and see it as well. But you didn't see at least and I've been in meetings, so unfortunately I didn't even get to take a gander and look and see what was going on too much. But even with the good news from the non-farm payroll and then also the lower employment rate, we didn't see a really big move from our futures. Let me double check here before I misspeak here. Yeah, I mean, you really kind of unch on the day, right? So it took it in stride, and I think the market's been thinking that something's going to happen in this next meeting, which is, whatever it is, 6 weeks away, 41 days away, whatever it is. There's a countdown ticker up on that Fed Watch tool as well that they have inserted in the header. So pay attention to that. You'll be able to watch and see how those probabilities change over time. I sent out the history, so what it looked like today, the day before, a week ago, and a month ago. So you start to get an idea of what the market is indicating by looking at the Fed fund futures, what the expectation is in terms of tightening and easing. And you can go out there and look at all the meetings in the future to see what the different target rate levels might be as well. So I just want to make sure that got out there.
There you go. Check it out. Listen, we got a lot of links over there at CME today. CMEgroup.com/TWIFO for, of course, the report that you follow along with the show every week. And then that one is CMEgroup.com/FedWatch. So you too can play your own Fed analysis game in between the Fed meetings, which is always fun. See what real money is actually pricing as opposed to what analysts are saying or anything else like that. I asked the audience what they wanted us to hit on next. They're kind of evenly split between the Treasuries, the golds, but it seems like silver is taking an early lead, which is kind of interesting because we actually have a listener question, I believe, about that as well. So maybe we'll cheat and we'll do kill two birds, Mr. Nick, and go on into the futures options feedback, and then we'll break down some silver from there.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback. This is the portion of the show where you guys take the reins and dictate what the heck we talk about. Sometimes you ask us to talk about products like right now, or maybe you ask about some other esoteric things. You guys asked all of the above this week. If you want to hit us up, if you are listening live, you can't hit us up live right now by the chat room or by the social media, at Options on Twitter, all the other places, at Options on StockTwits. We'll see it. We'll try to route it into the show. You know we got a good little backlog here already. If you're listening after the fact, hit us up via the usual places, and we'll try to work it in to next week's program. A lot of people asking, including in our poll and in our email here, our feedback about silver, which is kind of interesting. We don't get questions about that one a lot. The others as well, or the other shiny metal, I should say, we do. I don't know, Dan. Like I said, you're out there on the front lines, engaging with these folks day in, day out, dealing with their questions and all the other fun stuff. Which products are they excited about? And are they, so we seem like getting a little bit interested in the metals. Are you seeing a lot of people come in over there to Market Taker Mentoring asking about trading options on the metals? Is that a hot area, or you're not seeing that?
No, we actually are seeing that right now. We're seeing a lot of it because, futures been taking it on the chin for the past, couple weeks or so. Which is, just another symptom of the broader economic picture, right? Like you look at equity volatility across the board, it's extremely low, and equity volatility is highly, highly correlated with gold and silver. And, there's just a ton of complacency out there. And so, that's just hammering away at silver. And what's that doing? Well, it's creating a whole bunch of opportunity. So, my people in our futures class are looking at that really, really closely. That's one of the futures that we go over quite a bit in our class. Yep.
Got a bunch of silver heads. So you're out hunting some werewolves over there on the south side. Is that what you're doing?
Exactly.
I knew you had an ulterior motive to all your classes, sir. It is hunting occult monstrosity. That's what you do in your spare time, isn't it? Okay? I can get behind that. I'm okay with that. Speaking of the silver love, you guys obviously got it on the brain this week. We got a question also, in addition to people pick on that in our little flash poll here. Also got a question from Paul. He says, hey, Mark, what's your take on the timing of an investment in silver right now? I just got out of the market, and I'm thinking of investing in silver, either the traditional options or an ETF that tracks physical bullion like an SLV or an SIVR. I'm leaning towards the latter for its lower expense ratio. Let's get into what we're seeing in the big options, and then we'll kind of break it down from there, Mr. Nick. It's been an interesting week out here in silver, as Dan alluded to, with the futures selling off a bit, about a handle, pretty much across the spectrum down there. So off, right around about 5.5% out there. So a decent sell-off out there in silver land. Now, whenever we're talking volume in some of these other metals, remember what I said before about sometimes more paper on that one strike in WTI than in some of these other products, and that's pretty much exactly what we're seeing. We're seeing a total volume out here this week in silver, even though it was a pretty active week, up 11% in the OI of about 45,000 contracts versus about 70,000 in that one strike in WTI. So bear these things in mind when we're talking about them. But that said, it was actually a pretty even trade between about 44% of the volume going up in the front month this week, which is, of course, the June contract. But we did see size prints a little bit farther out. We'll get to those in a minute. In fact, let's start with those, because the actually most sizable print we saw this week, Nick, was out in the D's 2017s. and it was on the upside. So all this sell-off perhaps not dissuading them, or maybe they're like Dan, they need to buy all the silver they can to make their silver bullets for their nocturnal activities. So the 22 strike in Dees lighting it up. Number one with the, I would not have picked that. If you ask me right now, hey, what was the top hot month in strike in silver for this week? I don't think Dees 22s would have been on my list, but there you go. And what's interesting about that, Nick, is pretty much all of that was opening too on Tuesday, 2,000 lot, obviously a big aggressive block going up out there, all of that opening. So opening size paper here on the Dees 22s, which is number one with the bullet, a bit surprising. So we'll put that out. You guys can digest that on the Twitters out there as well. The number two, very close behind it, was maybe something you might expect a little bit more reasonable. It was the front month, the June 16 put. So a front month at the money put on a week when the market was selling off. That makes a little bit more sense. About 2,000 of those going up. A little bit more scattered paper there, pretty much even throughout the week with the lion's share, about 600 and change coming up on Thursday, and most of that opening as well. So 2,000 of those, maybe a long-term diagonal. That would be a weird diagonal. The 16 put got actually more of a time funky one there, but interesting nonetheless. And then it kind of falls off a little bit from there, Mr. Nick, down to the 17 calls, also in the very relevant range, as well as the 16 quarter puts. Both of those doing 16 quarter puts doing about a little under 2,000, and the 17 calls doing about almost 1,800. So very neck and neck there for number two and number three. Again, even paper across the board. When it comes to what we saw out here from vol, again, selling off out here in silver. So you expect to see vol creeping up, and that's pretty much what it did. Pretty much a point or more across the board out there, with a little bit more actually as you get a little bit closer to the front month. A little bit more maybe panicked, aggressive movement out here in the front month. Nick, I can't remember the last time you and I had this many people asking us to talk silver. It's been a few months at least. So clearly silver is on people's radar. What are your thoughts here? Actually, with the listener question too, I didn't even get a chance to get to it, in terms of the timing of diving into silver right now. And also, what are you seeing in the skew that's lining up out there in the big silver options?
Well, I think you probably can look at gold and see the fact that that's gotten hit. That's down about 3.5% this week, and it's down quite a bit since we started, paying attention to it a little bit more again a few weeks ago. So this is, like you mentioned, down over 5%. And, you see stuff out in the media talking about how the gold bugs might have been wrong and all that kind of rhetoric. So you got to imagine that, as Dan mentioned about correlations, that silver's going to be correlated to gold. So you see one metal take a hit, the other's going to take a hit. And I think that with the fact that, some of the uncertainty with either what the president's saying or in the economy, people are going to shy away from the metals in general. Now, with that said, you mentioned the 22 calls, right? So there's still somebody who thinks that maybe this is a little bit overdone, so I'm going to get in there and take a look and see what I can do. And they're out there pretty significantly from a time standpoint. So you figure they're probably fairly cheap from a delta standpoint, but a little bit more expensive from a time standpoint. But it's when you don't have much volume in a contract, it's hard to really know exactly what you think and actually what even the vol curve is telling you. But if we go out there and look, we have about 20 days in the June contract, and that's right on the cusp of when I like to start paying attention or stop paying attention to the quick skew. But the reality is here, if you go look at the June, the July, as well as the August, we've seen really you see that the calls are getting firmer, and the puts are getting less expensive. So they're still expensive today at the money, but they're less than they are. So if we start to look at what quick skews tell us, it looks like that vol curve is starting to balance out again, right? So we're going to get maybe a little bit of a crooked smile that's tilted toward if you're looking in the mirror, towards the left side of your face. But maybe it's similar. Maybe these commodities, and the gold, I think, is in a similar shape from a vol standpoint. Maybe we're to the point with the commodities where, or at least on the crude and the metals, where people are going, okay, we're sort of at an equilibrium future, even though I think silver's kind of low from where it's been in a while. So we could go a little lower, and we still definitely have interest on the upside. And if we look, if you look at we haven't mentioned it in a few weeks, the put-call ratio in those first two contracts, it's still pretty balanced. So you look at the put-call ratio, look at what the curve looks like. Maybe it's like, all right, we're here. We feel like this is kind of, if we can hang around here, or if there's a big move, I think people are saying it could go either way. Just like you're starting to see the oil starting to think maybe we could go lower, but I don't. We have a smaller range on the upside.
Yeah, that could be a sign of a couple of things. Obviously, it could be this sell-off, maybe bottoming out now. Maybe we're seeing, this equilibrium of interest. We're settling out around there. This is the new inflection point. So if you're looking at maybe silver getting a little bit long, maybe that interests you. Maybe you think that is, or maybe on the flip side, maybe that could disconcert you a little bit because maybe you don't want to get long a lot of silver until you see maybe an aggressive bias to the call skew, which means the market's really, really getting in with both feet and thinking the upside's coming back. So if you're waiting for that signal out there, we're not seeing that signal yet. But if you like this little bit of a settling out, maybe an equilibrium point, which seems to be what we're seeing out there in the silver options and the silver skew, I think this may be the point you're looking for. In terms of the products, we just broke down a lot of the futures options. I typically, ETF options that attempt to replicate, futures options, they usually have a basket of problems, and we talked about that before. Issues with replicating that negative roll yield. We see that across a broad spectrum of products. Some of the few that I think actually do a decent job are like these metals ones because they have a unique ability to be able to actually hold the physical, so they don't suffer from that negative roll yield. So I'm not as inclined to say, oh, you can't touch these as I were some of these other ones that you buy these things that attempt to replicate XYZ commodity with a basket of futures, and what happens? The thing just erodes every month until your returns are terrible. But in this case, these can actually hold the physical. So if you want to go that way, it's you can do it, even though we like breaking down again. And when we talk about skew, these products are all interrelated, so you're going to see similar skew setups. It's worth breaking down here in some of these other ETFs like the SLV and stuff. They don't trade independently of one another. If you see a bid in the skew in one month, you can see a bid in another, and vice versa. So it's a good way. This stuff is informative. No matter what product you're trading, analyzing and looking at the futures options, using the quick skew to break things down, that's informative. No matter what you end up pulling the trigger on. Dan, I'm sure people come to you a lot with these similar questions. They want to get into these commodities, but they have some questions about products. What do you tell them, and how do you usually guide them?
Yeah, I mean, I think it's great to look at the futures and the futures options data because, they're very liquid. You can extract a lot of information out of them. Kind of like you were saying. Well, kind of like both Mark and Nick were saying about looking at the skew. And I was just kind of thinking while Mark was talking, one other thought too that's kind of important to throw out there is, Mark was just referencing, well, maybe this is the point because the skew's more bid to the call side. Maybe it's time to get in and long futures, perhaps, if that's your inclination. But, you also have to consider that obviously gold and silver are perceived to be natural hedges against risk assets in general. And, with risk assets, real estate, the stock market at, pretty high levels, these could be not just people who are very, very confident that silver is going to make a comeback, but maybe they're just a nice little hedge against a larger existing portfolio. And it's the old, if I buy insurance on my house, do I want my house to burn down? No, So I think, especially when we're talking about those December 22 strike calls, I mean, that might not really even be a spec play. It might be somebody buying insurance and hoping they don't work out,
Yeah, we certainly have seen a lot of that. We see a lot of that in the volatility space, obviously, as we were just breaking down on our last show. So we do see that occasionally in other products as well, like the metals. So it wouldn't be that out of the realm of possibility. We like asking you guys questions on this segment as well. We did ask you guys at the start of the show a little flash poll here, talking about crazy moments in the market. We said these are crazy times for pretty much all the markets across the board, all the way from equities to volatility to commodities and everything in between. So we gave you 4 examples, and we said to you guys, which crazy level do you think we will hit first? And these quote-unquote crazy levels, I'll lay them out for you guys, and I'll let you guys make your choices as well. We said, so as volatility, a.k.a. the VIX, going to drop below 9 out there, is the S&P 500 going to rally above 2,500? Are we going to see WTI drop below 40, or for all you equity heads, are we going to throw? Are we going to see Apple above 160? Dan, you're in our hot seat. You get first pride of place to respond. Which of these outlier type events do you think we will see first, sir? Or none of them? You can just reject them all.
Well, I mean, I guess I would go with Apple above 160, just because people just love buying Apple stock. I mean, I could make a case for saying I don't feel like any of these are really rational, so I'm going to go with the irrational thing that's most likely to happen.
There you go.
That's probably Apple above 160.
You're talking Apple upside. The irrational can indeed come into the conversation. Mr. Nick, same question to you. Which of these four somewhat outlier-ish type events do you think we shall see first?
Well, I wouldn't expect, well, it would be interesting to see crude below 40 because that would really start to, because I think when we talked about it last time, a break-even production number was like $38 for the U.S., so that would be very, very, I'd be very curious to see what happened there. Dan says Apple 160, but I think if Apple was up 160, that there's a really good chance that the S&Ps would be up over 2,500, maybe even on just that $12 move on Apple on 160. So I'm going to go with S&P over 2,500 only because nothing has made sense so far with this rally, so I'll just go with that one.
You're right. Not a lot, and I agree. There are a lot of things are linked here. S&P above 2,500 is linked, obviously, to a VIX below 9, to Apple above 160. A lot of those things would kind of move in tangent. So if you see one of them, chances are you might be seeing a couple of the others as well. I think Dan may have a point with the irrationality, but I'm kind of liking just to maybe to be a little bit contrarian, and because we are talking crude so much, I am liking the notion of the crude below 40, particularly when we saw that dip 43 and change. That when I saw that, I started thinking that's a little bit more rational than maybe we initially thought when we first started putting these ideas together. Just a week ago, if you had said crude below 40, I would have said you're a crazy person. But now this week, a little bit of a change of pace, and I'm definitely with you on that, Nick. That'd be the most interesting of the bunch. Looks like our audience is feeling what Dan's feeling. There's 40% going Apple over 160, and then a tie, actually, an interesting tie, almost 24% each, so roughly a quarter each, tying with WTI below 40 and the VIX below 9. So interesting stuff there. And then only 12% feeling the love for SPX above 2,500. Even though I think Nick has a point. I think if Apple rallied that much, it's an index almost unto itself. It probably would carry the S&P all the way up to that as well. All right, you guys can vote in that throughout the weekend at options. Let us know what you think. Here's a good one. Lawrence T. He says, you guys, and in parentheses, I think it was Nick. I do think you're right. Talked about rent a while back. You should make that into a regular segment or report. Maybe who's paying the rent report. I think this guy's I think he's been listening to our off-air chat, you and I, because I've been saying, how long have I been saying this? That we should turn the rent is, maybe really quickly for people who maybe just tuning in, what the heck is the rent? What's he talking about? And then do you agree or disagree? I know how I'm leaning. How do you feel about what Mr. Larry T is throwing our way?
Oh, I think you've been saying it for a while because you like the fact that it kind of gave a little bit of a layman's look at the volatility.
It's sexy. Who's paying the rent in commodities this week?
It is. And rent is actually back in Chicago, May 9th through 15th at the Cadillac Theater.
Quite the student of the theater, you are, sir.
So, no, my daughter wants to see Rent, but unfortunately we're not available to do it for the times that we have. Anyway, sorry, Molly. But I think that's a good idea. I believe my reasoning for not pushing something out there quickly is I want to make sure that it's good and that it makes sense and that it's right, more or less. And some of the stuff we're trying to do is starting to look at volatility, not only in the rent from a movement of the underlying that's matched to those options, but also just making sure that we tie it together with the futures correctly, that we take into consideration the range of the trade versus the change, the day-to-day change. There's a way we have on the pricing sheets on QuickStrike, we have a range over rent and then a change over rent. And the range tells you if the range over rent, that means you had a day trading range where you can pay the rent. And then there was a change over rent, which basically says from day to day, did you actually have a full move on that day? So it doesn't take into consideration what happened intraday, where the one does. So I just want to make sure that we're able to do that with the right way, and maybe we'll set up some sort of rent index or something like that. Would be kind of cool. But yeah, I think it's a great idea. Mark has been talking about it for a while. It's just that sometimes the queue gets kind of long in terms of what we do have to put out there, and this is one that will make it out there. But I don't have a good sense of when that might be. But if you go on the pricing sheets and you could get them for free, out on cmegroup.com/quickstrike. There are free versions of the pricing sheet. I'm pretty sure we have the rent on there and maybe even those ratios.
There you go. Check it out. If you're heading on over there to the Quick Strike, or if you're looking at it right now, then you too can play the rent game. And I agree with you, Larry, I think, or Lawrence. I think that is an interesting idea. I'd like to find a way to make it make sense. That'd be a fun segment for the show. What's paying the rent? What's not paying the rent? I think a lot of people can wrap their heads around that. Even people who maybe don't traditionally, get into the commodities could start saying, hey, I could see that. Particularly now, we're seeing such a dearth of volatility across the broad equity space that people are really starting to look farther afield for other products to trade that maybe be able to deliver a little bit of juice, a little bit of vol for them. And for something like that, they can see a rent report. They can easily break that down. Hey, crude's paying the rent, silver, gold, whatever the heck, corn, paying the rent this week. That could start attracting them and saying, I might want to buy that. I might want to sell this. It's a nice point of entry to people. Speaking of points of entry, we got our last question here from Charles LMB. Sounds like a good, I'm not sure if he's British. It sounds like a good British name, though, doesn't it? He says, can't I just do most of this stuff in my stock portfolio using USO, GLD, and other ETFs? Do I really need to open a futures account? We get questions on this theme a lot. And I understand where a lot of you guys are coming from, which is, of course, that a lot of people take a listen into our network or coming in. A lot of you come from the equity and equity option side of the fence. So that's how you view a lot of these things. So when you're going to start playing, dipping your toes in the proverbial commodity waters, it makes sense that your gateway is going to be, like we talked earlier about an SLV, an ETF like those. They have a certain attraction. And those two, the GLD you mentioned here as well, those ones actually do a decent job of replicating the physical, and because they hold it. That's why. They're replicating the underlying. They do a pretty good job of tracking. Some of these other ones, like USO, you start getting further down the list. That's where we start running into problems. That's one of the reasons, quite frankly, why I wanted to really launch a show like this, just to kind of get a lot more information about these products out there, because what you have when you start diving into the more, shall we say, esoteric range of the ETF spectrum, particularly when they're trying to replicate a commodity, is usually what they have to end up doing is try to somehow replicate the underlying with some basket of futures. And you could just look at it yourself, listeners, and say to yourself, well, I want to replicate, I don't know, corn, pick your commodity, whatever it might be, cotton, gold, oil, whatever it is, and start saying, well, how do I do that now? Do I buy all front month futures? Do I buy maybe a basket across the term structure? And you start having to play that game. And as a result, you start seeing changes. Some perform better than others based on how they structure their basket of futures. Some buy a lot of very expensive longer-term futures and then sell very cheap near-term futures. So as a result, they have what's called negative roll yield, which means they're effectively eroding all of the time. And they don't do a good job as a result of delivering that underlying. And you just buy and hold them. Like a lot of people like to buy these things and put them in, retirement accounts, set them and forget them. You're getting crushed by that erosion on a very regular basis. So it's a very real problem. And at the end of the day, if you go straight to the source, if you go to the option on the future itself, you don't have that problem, which is why we like to talk about these a lot and try to get a lot of people to have a little bit more awareness about what's going on in, let's say, a big silver future, or even better, like, the WTI versus some of these ETFs out there, because you're a little bit more insulated from all those problems, on top of the other things like liquidity and things that are usually nice drivers for these products as well. But really, not having a lot of that entire universe of problems that afflict a lot of those products, I think, is a good thing. Dan, you must get this question a lot. People coming to you, hey, why do I need to open, a futures account to trade these things? What do you tell these people?
Yeah, I think one of the big keys is exactly what you just covered, the actual mechanical differences of how they work. Another obvious thing is, of course, the leverage feature. You're going to get more leverage with futures if that's your inclination. Another thing also is just the term structure of the futures, both from just, an observation standpoint. It's great to watch because you can infer market information out of that, as well as, as maybe trading advantages to that as well. And then, of course, the greater aptitude you get with just plain old futures trading, then there's spreading opportunities, and then spreading opportunities among futures options. So I don't know. I guess between what you mentioned and the futures term structure advantages and information, and just greater freedom and ability to capitalize on more opportunities, I think is the advantage to having a futures account. There's nothing wrong with trading the ETFs also, but there's advantages and disadvantages to both, for sure.
I think the leverage one is a good point. And you're right. And you start getting, particularly out in some of these more esoteric ETFs, the liquidity is a little bit hard to find, which is a challenge on top of the other things you mentioned, like the negative roll yield and things. So, and all of a sudden you're paying a huge spread on top of that. It makes it really hard for those trades to be profitable. So that's a definite advantage that is also worth pointing out. It's also worth pointing out for Charles, as well as anyone else who has this question. This used to be a big issue, particularly when we started Options Insider, which is, a decade or so ago now. So a lot has changed in the brokerage realm in the intervening 10 years, including the fact that a lot of brokers, and you should really reach out to yours. You don't mention which one you may use here. You should reach out to yours and see what the process is for opening that account. It used to be a huge pain. You had to fill out separate forms, have them sent to you and, sent back. It was a separate account with a separate interface. Most good brokers now have really streamlined that process. So it's effectively, you click on one tab in the account you already have. You click on a couple of the things. They approve or don't approve you depending on their process. And then it's pretty much all streamlined into the same interface. So you don't even really notice that you're really trading separate accounts. It's all for your end use. It's really all the same thing. So they've done a great job of really streamlining that, which makes it a lot less laborious. So if you were intimidated by the process or anything else like that, a lot of the good brokers out there have really gone above and beyond to try to make that process much easier than it ever used to be. All right, there it is. That music, Mr. Nick, Mr. Dan, means, unfortunately, we've come to the end of a very fun, very pleasant journey through the world of futures options. We started off talking, as we are wont to do on this program, particularly this week, all things crude, what was going on, the vol, the skew, the term structure, what was lighting it up, maybe some contracts that may have surprised you. Then we turned it over to you guys, see what we talked about next. Everyone wanted silver, so we talked silver. Dan and his werewolf hunting club can now be happy for the rest of the week. Maybe they're happy. Silver's cheaper now, so you can make those bullets. It's a lot more cost effective for your nocturnal activities, sir. And then, of course, got some other questions about ETFs versus futures options. And we asked you and us to weigh in on some of the more esoteric things that may happen out there in the space. You guys also have some good feedback for us in terms of what features and segments you'd like to see on the report. Maybe we'll work on that rent segment coming up. I like that idea. I'm going to use that, Larry. I'm going to go out to Nick with that and see if we can get that going. That's a good idea. But before we go, one last time, we check back around the horn with my cohorts. Let's start over there in the hot seat. Dan, you are our guest. You get pride of place. Hope that seat wasn't too hot for you. It can burn sometimes. We put some padding on it, make it a little bit more comfortable, but it still gets pretty warm over there. But that said, before we wrap up, what's cooking over there with you guys? And people want to learn more about what you're doing in the futures options realm. Where should they go? What should they do?
Yeah, Mark, I was thinking about this before coming on the show, and I figured that I would give all our listeners a free 1-month trial of our futures class so you can see if you like it. You can try out our daily futures class. It's all online. It's a 1-hour webinar-style class where you get about 5 futures trade ideas every day. Just go to markettaker.com/futures free, all one word. That's markettaker.com/futures, plural, free.
There we go. Market Taker. I always say Market Taker Mentoring, but it's markettaker.com/futures free. There you go, listeners. A free deal. You can't beat that. So if you liked all these things we're talking about here, maybe you want to sit down with a mentor and work through how some of these things work and how you can apply basic and regular option strategies you may be familiar with, but how to apply them in the futures and futures options landscape. There you go. Check out what Dan and his team have got for you. Speaking of what you got for us, Nick, we've already touched on a couple of things. You had the live links during the show, which was awesome. Hopefully people got some joy out of that. If you can't join us this week, try to make it next week. We'll have those links live for you again. It's fun. You can play around. Otherwise, you have to have the upgraded version, shall we say, to really get access to all that stuff. But during the week, we make everybody upgraded during the show. So you all get to play along, which is kind of fun. That said, Mr. Nick, you guys are always busy over there in the land of Quick Strike, working on a lot of cool stuff. What can we expect coming down the road, sir?
Yes, I hope people are going out there during the show. I mean, we are kind of we're trying to bait the hook a little bit, right? I mean, it would be nice to see some more live listeners, and I think it'd be kind of fun to click around with us and see what we're talking about. If you notice, if you were listening today and you noticed that we were doing some tweeting during the show, we've Tony and Mike back back in the old global headquarters, Quick Strike, they incorporated some cool functionality that let us basically tweet any page, and then it shows a nice picture of it in Twitter, and then it goes off to a static version of that page. So that's a nice way for everybody to see what we're talking about and also share it. And that same functionality will be released to the general public, where if you're in Quick Strike or Essentials or one of the tools, you'll be able to tweet it out and share it with your followers. So that's kind of the fun thing that we put out there, and a lot of stuff that gets created in there is sort of selfishly done because I like to use it, and then hopefully it makes its way to the general public.
Necessity is the mother of invention,
sir. It is. But like I mentioned, the Fed Watch tool's out there, so go take a look at that, and then I'll mention it every week. CME Direct is a very nice trading platform that CME Group has, and Quick Strike is pretty tightly integrated now at this point. And Quick Strike and CME Direct are now talking back and forth to each other, so you can create trades in one and send them back and forth, and then analyze, and then send it back, and then have some options to put it to a deal and all those kind of things. So take a look or call the CME and ask if you can get that install. And then finally, just a little bit of a future teaser. I think we started to do some work, but there's a good chance that we have a site out there or some functionality called askqs.co or .net. I'm not quite sure yet. You'll be able to type in something like NFP space something or econ space NFP. We're not quite sure what we're going to do, and it'll give you an answer back about that kind of thing in a chart or some.
So it's like your own version of Ask Jeeves.
Yes, like Ask Jeeves, and I owned that stock many years ago. But Ask Jeeves, so it's Ask QS, and the QS is Quick Strike, obviously, but it could be a capital Q with a small s. Ask questions. It could have any number of meanings, but that might be. So
I can
out there
go to you and
horizon.
say, "What is the meaning of life?" And then your algorithm will spit out the answer. I like that.
It'll be only economic and/or exchange-related data. So we'll see.
Cool stuff. See, keep an eye on that. See, we asked Nick for some teases, and the floodgates open with all sorts of cool stuff. Thank you for that, Mr. Nick, and thank you, Mr. Dan. Thanks to all of you for joining us out there. We love to hear from you guys too, and we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.